Yo, what is good, guys? So, as I did, guys, promise you that I'm gonna be showing you guys my entry strategy that I use on a daily basis. So I figured, guys, that it would be very much important if I maybe give you my first grade setup and then give you my second grade setup. So these are the two kind of setup that I kind of like look for before entering into any kind of like a position. So we're gonna be diving more deep into them and understanding them as to what the market is doing. So on the first grade setup, in this setup, when price is in my higher time frame, supply or demand. So the first key thing is that price has to be on the higher time frame supply or demand or order block, you can just say. I then look for smaller time frame range. Then above or below, I look for LQ to be taken out. Then show displacement in the direction I'm looking to trade from. Okay, so this is what I'm actually saying here, is that after price has been pushing up into my higher time frame supply, because I'm looking to sell here. So I'm just gonna use the term supply for an example. Let's just say this is our higher time frame supply here. So we have our higher time frame supply. So the first thing that I look out for is the smaller time frame range. So I look for this range. So I want to see this range. Once I see the range being created by price here, so the next step is that I want to see this buy side liquidity, because remember, guys, there are people who are trading a breakout type of trading. So when they see this, they assume that is a breakout, and then they enter for a breakout kind of like entry. And there are those who are entering just immediately on this level of resistance, and then they put their stop loss above. And then when this liquidity is being taken out, both of these two traders, they are losing money, as the buys are in just small profit. The sellers are just taken out immediately after they enter into the trade. And then what I want to see after we've taken out this liquidity that was created by price, I want then to see price pushing down, breaking below, showing me this displacement or this impulsive move to the downside. Once I do get that move to the downside, then what I want to see, I want to see a fair value gap in that time frame. Probably maybe for my entry time frame is like my 10, my 5 minutes and my 15-minute time frame. So I want to see price pulling back into this into this fair value gap, so that it can continue doing what, so that it can continue shooting all the way to the downside. So my risk to reward ratio for this is always 1:2. I'm always entering here, having my stop loss above these highs here, just above these highs. Sometimes I can put it just exactly, but I don't like to have tighter stop loss, because for me, I find more consistency with this stop loss, whereby I give my trades a little bit of more room to breathe. And then I'm always targeting 2% on this position. So that's what my target. So with these positions, guys, when I find a setup like this, probably not on Monday, but on Tuesday, Wednesday, and Thursday, that is when I'm more actively trading this. So when I find this kind of setup, I normally will go for a 2% risk instead of going for a 1% risk. So I know that if I'm risking 2% on this trade, then I'm looking to maximize a profit of 4% on just this one trade. So that is the scenario whereby we are looking forward for selling opportunities. But if you are looking for buying opportunities, it's still the same scenario. I want to see price pushing back or down into my what, into my demand area. So this is our higher time frame. What? This is our higher time frame demand. Let me just put this. This is our higher time frame demand. So I want to see price pulling into my higher time frame demand. And then after price has pushed into my higher time frame demand, I then want to see this range here. So once I see the range here, what do I want to see? I want to see liquidity being taken out of this range here. So I want to see price taking out this liquidity here. Once price do take out this liquidity from these areas, as I did say, guys, that other people who are having their sell stops, breakout traders looking to push price further down, and there are those who entered buys here and they have their stop losses here. Both of these traders, the buyers and the sellers, are being taken out of what, of this price action here. So once price has taken them up, what I want to see, I then want to see this displacement, which then gives me the change of character. or give me the break of structure from here. Because of, remember guys, there's level of support here. So what can normally happen as well is that price can just respect the support and continue pushing to the downside. So what we confirm with that price is now maturing to go into our direction, which is bullish in this case, is that we want to see that displacement or an impulsive move to the downside, and then we want to see a pullback into our fair value gap. Once price pulls back into our fair value gap, then that's when we're entering our long positions. Obviously, guys, our stop loss just below these swing lows here, and then looking for a 1:2 trade as well. So with this trade setup, guys, still the same thing. I always look to do what to target at least 4% risking 2% with this trade. So that's the first entry. That is my first grade setup. So now let's just dive into our second grade setup. All right, guys. So now this is what we call our second grade setup. So on our second grade setup, it's pretty much simple as well. I wait for price to show a nice display of price action to the direction I am looking to enter from, then giving me a change of character. Then I wait for price to put back into my fair value gap. So on my second grade setup, it's pretty much simple. Sometimes I'm not looking for a range, or I'm not looking for, or sometimes price won't print out a range here, but it will just be giving me these higher highs and higher lows. As you can see, price was giving me these higher highs here, and we have other higher highs here. So price was giving me these higher highs of price action here. So from here, you see that we made these higher highs, and then from here, we made these higher highs. So I'm just going to assume that this is our higher time frame what supply, because remember guys, these entries are only valid if we're looking at them on our higher time frame perspective, or supply or demand. If they are not happening on supply or demand, then this could just be a seek and destroy type of scenario, because of buyers as sellers are being destroyed and buyers are being destroyed in this area. So it could be a seek and destroy if it's not on our key areas. So I want to see price taking out this liquidity from here, because clearly here you can see that we did print what we did print a swing highs here. So I want to see price taking out these swing highs, and then I want to see the displacement to the downside, breaking these lower highs that were created by price, making new lower lows here. Once price creates these lower lows here, then I'm then looking for price to pull back into my FVG, and then once price does pull back into my fair value gap, then I'm looking forward for selling opportunities to the downside, obviously with my stop loss just above these areas here, and then my target is the 1:2. So with this entry strategy, I always risk 1% to make 1%. I don't risk 2%, but I risk strictly 1%. So these are the rules that I put for myself to say this kind of setup, I am risking this much, and then this kind of setup, I'm risking this much. So when we are looking for buying opportunities, guys, it's still the same scenario, pretty much simple. So I want to see price kind of like checking out these highs as well. From here, you can see that we have these lower lows. I mean, we have lower lows here. So I want to see price taking out that liquidity from these areas that has been created by price. And then I want to see that displacement to the upside. Once price displays to the upside, breaking a structure here, as you can see, we do have a break of structure here. Then I want to see price pulling back into what? Into my fair value gap. And then once price does pull back into this fair value gap, then I'm looking for price to continue pushing all the way to the upside. So with this entry criteria, I'm always looking for a what? A 1:2 as well. I'm risking what? I'm risking 1% to make 2%. I'm not risking 2%, but I'm strictly risking 1% on this entry criteria. So that's it, guys, about today's session. Make sure that you like, and you also drop a comment. Probably maybe if you want me to maybe do another video on a specific maybe a lesson. But the next lesson will be on fair value gaps. I'm going to be teaching you guys about fair value gap. So make sure, guys, maybe if you want me to go through this entry criteria, maybe backtest it so that I can show you maybe on the real-time chat, then make sure that you hit me maybe on the comments and stuff like that, so that I can do the more specific or more detailed video on this topic. But thank you so much, guys, for tuning in. It's me, your boy, Fanlake Mamba. I'm out. Let there be peace. Let our brothers and sisters be safe. Don't forget, guys, to do what? To subscribe and like this video and also share this video. I'm out. Peace.